Hi, I'm Bobo. Since the government's full withdrawal of property cooling measures in February, developers have continued to launch new properties at low prices. The transaction volume for new projects has surged, recording over 4,170 cases in March, which is the highest single-month volume since the implementation of the Residential Properties First-Hand Sales Ordinance in 2013. Entering April, the first weekend saw the launch of a major new property development. This year's top-selling new property is developed by CK Asset and the MTR. Wangcheok-hang Station's Phase 3B project, Blue Coast, launched 422 units last Saturday, eventually selling 406 units in one day. Although not all units were sold at once, the development generated nearly 7.5 billion Hong Kong dollars for the group, setting a record for the highest sales revenue in one day for a new property since the implementation of the First-Hand Sales Ordinance. Developers indicate that among the buyers, 70% were local and 30% were Mainland Chinese. Among them, two major buyers purchased 8 three-bedroom units each, which cost 153 million Hong Kong dollars and 140 million Hong Kong dollars respectively. In addition, Chiu Kwok-hung, CK Asset's executive director, spent more than 20 million Hong Kong dollars on a three-bedroom unit, which is expected to be used as a private residence. He also expressed interest in purchasing a four-bedroom unit later on. To maintain sales momentum, the developer immediately launched a fourth price list. It involves 88 units covering two-bedroom to the newly introduced four-bedroom units, maintaining the original discount with an average discounted price per square foot of about 24,000 Hong Kong dollars. This is about 1.7% higher than the average discounted price of the third price list at about 23,900 Hong Kong dollars, and about 5.8% higher than the first price list at 22,955 Hong Kong dollars. Some units have seen a nearly 8% price increase compared to the previous price lists. Despite CK Asset's earlier statements that they would continue selling the four-bedroom units via tender, they ultimately decided to release them through a price list, specifically the 23rd to 29th floors of Block 1A, comprising 12 four-bedroom units. The discounted prices started from 35.617 million Hong Kong dollars, with a per square foot price reaching nearly 30,000 Hong Kong dollars, pushing up the average price per square foot for the entire batch of units. Developers expect the prices for the new units to rise by about 3%, emphasizing that these figures have yet to reach the cost price. They anticipate further upward price adjustments. However, the premium four-bedroom units are still set aside for tender sales. This strategy hints that developers may harbor some reservations about the future market, opting to capitalize on the current surge in transactions. On Sunday, an additional 7 units were sold, totaling 413 units sold over the past weekend. Looking at other remaining stock, 500 transactions were recorded in the first-hand residential market. Notably, large clients have been buying in bulk. For example, one buyer snapped up 12 units at Henley Park, Henderson Land's project in Kai Tak, each unit with a saleable area of 250 square feet for a total of about 66.56 million Hong Kong dollars. Another noteworthy rail property launched last month is the Phase 12A project of Lohas Park, Seasons Place, developed by Wheelock and the MTR, along with Phase 12B named Park Seasons. This phase features 2 buildings with a total of 685 units, exclusively offering one-bedroom and two-bedroom layouts measuring 314 to 537 square feet in size. The project's completion and move-in dates are slated for the end of November 2025, allowing for a pre-sale period of nearly 20 months. The developers plan to release the first batch of about 138 units this week. The pricing will reflect the transaction prices of the previous phase and features of current projects, with all units expected to be priced below 10 million Hong Kong dollars. However, there is a projected price increase of 5% to 10% compared to Seasons Place. Since the one-bedroom units in this phase are smaller than those in the previous phase, the starting prices may be lower, so for those interested, pay attention. Next, the redevelopment project Topside Residences on Nathan Road, developed by CSI Properties, is also expected to enter the market shortly, with the fastest launch within the month. The project offers 259 units, covering one-bedroom to three-bedroom layouts, measuring about 200 to 1,500 square feet in size, with a focus on two-bedroom units. The developer indicates that pricing will refer to similar projects in the same district built in the same period. As buyers flock to new districts, second-hand transactions slow down. Over the weekend, Hong Kong's 4 biggest real estate agencies recorded only 7 to 10 deals for the city's top 10 blue-chip housing estates. Among the agencies, centralized transactions have fallen to single digits for the first time since the city withdrew its property cooling measures. Meanwhile, several housing estates continue to face pricing pressure, with some owners who entered the market early exiting with a loss of 7 figures. One transaction at Caribbean Coast in Tongcheng saw a 3-bedroom upper floor unit measuring about 750 square feet change hands for 7.6 million Hong Kong dollars at about 10,000 Hong Kong dollars per square foot. The original owner bought the flat in 2020 for 8.21 million Hong Kong dollars, booking a loss of 610,000 Hong Kong dollars. Including additional expenses, the owner's total loss is about 1.05 million Hong Kong dollars. Next, Providence Center in North Point has recorded a transaction reflecting one of the largest depreciations in recent years. A low-floor 3-bedroom unit measuring about 1,200 square feet with views of Victoria Harbour was initially listed in October of the previous year at about 17.4 million Hong Kong dollars. After a 16% reduction of 2.8 million Hong Kong dollars, the unit sold for 14.5 million Hong Kong dollars at a price per square foot of about 11,600 Hong Kong dollars, a near historical low for the estate. The original owner, who bought the flat in 2019 for $19.5 million, booked a loss of 5 million Hong Kong dollars after a holding period of just 5 years, translating to nearly 26% in depreciation. In addition to housing estates, owners of semi-new projects who entered the market in earlier years are also opting to cut their losses. A low-floor 1-bedroom unit in Taiwan's The Met a Capella, measuring 401 square feet, was recently sold for 4.5 million Hong Kong dollars, or about 11,200 Hong Kong dollars per square foot. The original owner, who purchased the unit new in 2018 for about 8 million Hong Kong dollars, has seen the value nearly halved, booking a loss of about 3.5 million Hong Kong dollars over a 6-year tenure, which equates to a near 44% depreciation. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.